Hello friends, how are you all doing? Great. So can we start with our new cost accounting standards, cost accounting standard 4 and 5. So basically we are not going to complete cost accounting standard 5 because we don't have so much time to complete it within 1 hour. So definitely we are going to complete it in our next session. So basically today we are going to complete with the most important standard, which is cost accounting standard 4 for captive consumption. Okay guys, this is the most important. Okay, so let's start. Cost accounting standard 4 on cost of production for captive consumption. So what are the goods which we are going to consume captively? Captively means, we had seen this in the previous sessions also. What is captive consumption? When the goods are produced by one division of the company and used by another division of the same company, then that is known as captive consumption. Okay guys, so in these goods, what cost we have to include as cost of production? Okay, so we have to check in this cost accounting 4 about all these things. So guys, let's start with the introduction of this cost accounting standard 4 first. Most importantly, captive consumption means the consumption of goods manufactured by one division and consumed by another division of the same organization. Most important, or related undertaking for manufacturing another products. Suppose one unit is producing electricity and one unit of an organization is producing electricity and another unit of the organization is consuming it. So this is known as captive consumption for production of final products. Another final products or another products we can also write. Okay guys, this is quite simple. It is produced by, suppose, unit A and it is consumed by unit B for production of another goods, suppose biscuits. So this is the example of captive consumption. Is it clear guys? Most simple. Okay, great. So now the liability of excise duty arises as soon as the goods covered under excise duty are manufactured. If we are producing the goods which are covered under excise duty, so as we are producing the goods, so the liability for excise duty is generated, is arrived. But excise duty is collected at the time of removal. I think all of you know that it is collected at the time of removal or clearance from the place of manufacture. Even if such removal does not amount to sale. Basically, suppose we are producing electricity in A unit, okay, and we are consuming it in the another unit of the same company B. So whether A have to pay excise duty or not? Definitely they have to pay excise duty, even if it is not amounts to the sale. Even in that case also, basically the taxable event in the case of excise duty is production of the goods which covered under excise duty. If we are producing the goods, definitely taxable event creates. And when we are removing the goods or we are clearing from the place of manufacture, we have to pay excise duty, even if it does not amount to the sale of the goods. Okay guys, it is quite simple. Okay, now basically according to Central Excise Valuation Determination of Price of Excisable Goods Rules 2000, the assessable value of goods used for captive consumption is 115% of the cost of production of such goods. Okay guys, it is 115, not now it is 115, now it is 110%. Before 5/8/2003 it is 115%, but now it is 110%. So we have to use 110% for calculation. I think all of you are clear with this slide. More simple, easily understandable. Okay, great. So now let's start with our objective. What is the objective of preparing Cost Accounting Standard 4? So the first objective, the purpose of this standard is to bring uniformity in the principles and methods used for determination of the cost of production of the excisable goods used for captive consumption. So this is the main objective is this standard, because each and every person is following their own things. What they understand, they are following all those things. But when the government wants to make the uniformity in the principles and standards, they prepare a Cost Accounting Standard 4 for the calculation of cost of production for captive consumption. Okay guys? Then the cost statement prepared based on standard will be used for determination of assessable value of excisable goods. Basically the cost statement we are preparing, and these cost statement are as per the Cost Accounting Standard 4. Definitely we can use it for the determination of assessable value of excisable goods used for captive consumption. So we can use it. There is no other thing which we have to use for calculation of assessable value for excisable goods. Okay, the standard and its disclosure requirement will provide better transparency in the valuation of excisable goods used for captive consumption. Basically this standard is prepared for which purpose? Basically to bring transparency in the valuation of excisable goods, and not for all excisable goods, only excisable goods which are used for captive consumption. Most important point, you have to learn these things. Okay, now how we are going to determine cost of production for captive consumption? So first thing we have is material consumed. So material consumed shall include material directly identified for production of goods. Those materials which we can directly identify for production of goods, we have to just include all these things, such as indigenous materials. First of all, indigenous means which are purchased in-house from our own country. Those are indigenous materials. Then imported materials also should be the part of material consumed. Then if there is any bought out items which we are purchasing, we have to include that also. Then self-manufactured item. If we are manufacturing any goods which are used as a material consumed, then it should also form the part of material consumed. And then any processed materials and other items, it should also be the part of material consumed. Now the cost of material consumed shall consist of cost of material, any duties and taxes we are paying, any freight inwards, any insurance and other expenditure which are directly attributable to procurement of goods. If any of the expense we are bearing regarding the procurement of goods, all the things we have to include in the cost of material consumed, like duties and taxes, freight inwards, insurance and any other expenditure. Trade discount we are getting, any rebate we are getting and other similar item will be deducted for determining cost of materials. So whether cash discount is also included? No, it should not be included. Only trade discount is the part of, should be deducted from the cost of material, because cash discount will not receive cash discount on every purchase, but trade discount we get on each and every purchase. So it is normal income we can say. So it will reduce our cost of material. Now the next one is direct wages and salaries. So what all we are going to include in this direct wages and salaries? So direct wages and salaries shall include house rent allowance. If we are living on rent, we always get house rent allowance from our employer. Afterwards, any overtime salary we get, any incentive payment made to the employees. So all is the part of direct wages and salaries, which shall include house rent allowance, okay, overtime and incentive payments. Directly engaged in the manufacturing activities, if those workers, those employees are directly related to the production of goods, or we can say directly engaged in the services of manufacturing. So these are the part of direct wages and salaries. It includes fringe benefits. Fringe benefits also, that is extra benefits, contribution to provident fund, any bonus, any ex gratia payment to the employees, provision for retirement benefits. If you are getting any retirement benefits activities, then also it is the part of direct wages and salaries. Then any medical benefits we are getting, more simple. Any subsidized foods are provided to the workers who are working in factories, who are engaged in manufacturing activities, is also included. Leave with pay and holiday payment, if we are paying, if we are giving any payment even on the leave also, even there is any holiday payment also, then it is the part of wages and salaries. Then if any leave encashment is there, we have provided them leaves, but if someone is not availing the leaves, we can encash those leaves. Okay guys, more simple. Now the next one is direct expenses. Now the third one is direct expenses. So basically direct expenses is also the part of cost of production, and direct expenses are the expenses other than direct material and direct employee cost, which can be identified with the product. So all the costs which are directly identified with the product are direct costs. So out of this direct cost, there are direct expenses, and this direct expenses include cost of utilities like fuel, power, water, steam. All these are included under direct expenses. Then any royalty based on production. Afterwards, any technical assistance, any know-how fees, any job charges, all are the direct expenses. More simple. Then there is a quality control cost. So what is quality control cost, guys? It is the expenses incurred relating to quality control activities. We have to control the quality. So why there is a need to control our quality? Definitely the market is so competitive. If you are going to provide, we have to meet our quality standards, and for that purpose we are required to just go for quality control cost. If we have to control our quality, we have to incur some cost, because we have to follow some standards, and for following those standards we are required to do some quality checks which have some extra cost. So definitely quality control cost is basically cost for adhering to the quality standards. Okay guys, now the next is packing cost. If product is transferred or dispatched duly packed for captive consumption, if we are transferring any goods and dispatching those goods for captive consumption, cost of such packing should be included. Okay guys, we have to include the packing cost also. And packing cost includes both cost of primary and secondary packing. We have to include both type of cost, primary cost and secondary cost. And the cost, basically these costs are required for transfer or dispatch of the goods used for captive consumption. So basically packing cost is also the part of cost of production for captive consumption. Basically packing is for transfer and dispatch our duly packed goods for captive consumption, and cost of such packing shall be included under packing cost. Okay guys, quite simple. Okay, so treatment of joint products and byproducts. A production process may result in more than one product being produced simultaneously. When we are producing one or more products, more than one product, two or more product we can say jointly, simultaneously on one hand, then it is joint products. In case joint products are produced, joint costs are allocated between the products on a rational and consistent basis. We have to just divide the cost. Okay guys? We have to divide the cost. Joint product, basically it is a process in which more than one product being produced simultaneously. When we are producing more than one product simultaneously, not one by one, we are producing simultaneously. Suppose there is a process in which we are able to produce two products, A and B. When we are producing both the products, it is known as joint products. Okay guys? In case of byproducts are produced, the net realizable value of byproduct is credited to the cost of production of the main product. See, we are producing A and B for jointly. We are producing A and B for selling in the market. But while producing AB, we get a product which is not required, that is C. And if we want to sell this product in the market, and any money we are getting from the sale of C is basically going to reduce the cost of A and B. If we are suppose expending around 2 lakhs in the production of A and B, and if we are getting value of 50,000 from the sale of C, so our ultimate cost is 1.5 lakhs. Is it clear guys? Okay, great. Now, the treatment of scrap and waste. The production process may generate scrap or waste. Realized or realizable value of a scrap of waste shall be credited to the cost of production. Okay guys, most simple. Every time we are producing the goods, definitely we are just realizing some scrap value also, because we definitely going to generate scrap also, and these scrap are going to be sold in the market. So definitely any money which is realized from the sale of scrap or waste is going to reduce our cost of production. Okay, in case scrap or waste does not have ready market and it is used for reprocessing, the scrap or waste value is taken at a rate of input cost depending upon the stage at which such scrap or waste is recycled. Suppose scrap, the name of scrap is suppose D, and this D product is used for manufacturing of Geo product. It is somehow related to medical products, and we are using D for the production of Geo product. Okay, so if we are not going to use D for the manufacturing of Geo product, then it can be sold in the market for ₹20 per unit. Okay guys? Or if we want to purchase this from the market, we have to pay 22 rupees per unit. So which cost we have to just credit to our cost of production? Which cost we are going to credit? 20 or 22? Definitely we are going to credit 22 rupees per unit, because it is our input cost. Input cost is taken as the value for cost of production. Okay guys, it's simple. Great. So now we have one numerical for cost of production for captive consumption. I think all of you are clear with the concepts regarding cost of production for captive consumption. Okay, so now have one numerical. The following particulars pertaining to product AZ are extracted from the record of Shinjin Limited for the year ended 31st March 2017. We have direct material cost 827, we have direct wages and salaries 200, indirect material we have of 75, then we have direct expenses of 100, we have factory overheads of 200, administration overheads of 20% of production activities, and quality control cost is 25, and research and development cost of 25. Then We have selling and distribution overheads of 15, sale of scrap realized 20 rupees, material cost included excise duty which we are paying for rupees 27 rupees, and actual profit margin is 15%. So what we have to do, we have to calculate the cost of production for purpose of captive consumption in terms of Rule 8 of Central Excise Valuation Determination of Price of Accessible Goods, Rules 2000, and as per CAS 4. And also we have to calculate the accessible value for the purpose of paying excise duty on captive consumption. Is this question clear? Okay, so no issue if it is not clear. We'll just take each and every point one by one. So first of all, what we have to calculate? We have to computation of cost of production. And accessible value as per Rule 8. So first of all, we have direct materials. I think all of you clear with the direct materials, guys. And we have to exclude excise duty also, exclusive of excise duty. So it is 827 and excise duty is 27. So we get the value of 800. Then we have direct wages and salaries. How much it is, guys? How much? It is 200. And then we have direct expenses. It is 100 given in the question. Afterwards we have factory overheads. How much, guys? It is 200 plus 75. Okay, let me show you. It is 200. Okay, and administration overheads include 20%. So this is the administration overhead, not the factory overheads. We have indirect material. So indirect material is the part of factory overheads. Okay, guys, is it clear now? So factory overheads are of 275. Then we have quality control cost. How much it is? It is 25. We have research and development cost. How much it is? Same 25. Then we have administration overheads. How much? Till it is related to the production activity. So 100 into 20%, it is 20. Then what we have to do, we also realize some scrap value. How much? It is 20. So we will put in the brackets because it will reduce our cost of production. Then the total we get is our cost of production. Oh, simple. And we get this question for around 5 to 7 marks. In this, we add 10% as per Rule 8. And when we just either we multiply it with 110 or 110% we can say, or we just calculate 10% of cost of production, it is 142.5, and the total is our excise duty, is our accessible value 1567.50. It is accessible value as per rule 8. Most and most simple. Just as we are preparing cost sheet, we are not going to include any other thing, only the things which are related to the factory overheads. We have to include all those things, or we can say which are related to the production of the goods, are included under the part of cost accounting standard 4. Okay guys, is it quite simple? Great. Now we are coming on cost accounting standard 5. Our new cost accounting standard 5. It is for determination of average equalized cost of transportation. So this is also the most important cost accounting standard, guys. So what is the objective of this standard? The objective is to bring uniformity in the application of principles and the methods used in the determination of average or equalized transportation cost. Transportation cost should be average. Suppose if we are transferring, suppose we are transferring some goods and paying some transportation cost, and this transfer is for 3 times, 5 times, 10 times. So we have to just take out the average of the transportation cost, because sometimes we had paid 200, sometimes we had paid 100, sometimes 50, sometimes 10. So every time it is quite different. But when we do the costing, we have to just calculate the average of all the transportation costs, guys. Okay. So to prescribe the system to be followed for maintenance of record for collection of cost of transportation, its allocation and apportionment to the cost centers, locations of product. Basically, to prescribe the system to be followed, when we are prescribing any system which we have to follow for maintenance of record, basically for collection, it is required that we should allocate, we should apportion to the cost centers, locations and the product. And to provide transparency in the determination of cost of transportation, we are going to follow cost accounting standard 5. So it is quite important. So first of all, what is cost of transportation? Cost of transportation comprises of cost of freight, cartage, transit insurance and cost of operating fleet and other incidental charges, whether incurred internally or paid to an outside agency for transportation of goods. So if we are paying any freight charges, definitely freight means the charges for transferring of the goods. Any cartage we are paying, cartage means for the loading of the goods, and then we are also going for the insurance, and afterwards cost of operating fleet, we are hiring some driver or any person, and also other incidental charges. Either we are paying internally, because sometimes lot of the companies who are huge in nature have their own transportation. So either it will be internally, or we are hiring some outside agency for the transportation of goods and we are paying the expenses to them. So it is also the cost of transportation. Next, inward transportation cost. So inward transportation cost is the transportation expenses in connection with material or goods received at factory or place of use or sale or removal. So what is inward transportation cost? So the transportation expenses which we are incurring, in which connection? In connection with the materials or goods received at a factory. Suppose we are receiving goods and we have to just transfer the goods from one place to another place. So definitely when we are factory is not small. Many times factory is not small. We have to just transfer the goods in the factory or within the company, any place. Okay. So it requires to go for inward transportation cost. And what is outward transportation cost? It is the transportation expenses incurred in connection with the sale or delivery of material or goods from factory or depot or any other place from where goods are sold or removed. Outward transportation. In inward, we are transferring goods within the factory, within the company. Internally, we are transferring. But in outward transportation cost, we are transferring our goods from the factory to the place where the goods are sold or removed, we can say. See, most simple thing here you have is in inward transportation cost, goods are not sold. We are just transferring goods from one place to another, basically to just go for production in a better manner. But in outward transportation cost, what we are doing? We are incurring transportation expenses because of sale of the goods. We had sold the goods, now we have to deliver those goods to the buyer. And this transfer of goods is from either from the factory or from the depot or from any other place to the place where goods are sold. Okay guys, more simple. What is freight? Basically, any of the charges which we are paying for transporting our materials or goods from one location to another. If we are paying any charges, then definitely it is known as freight. We are paying the charges for transportation of goods. This is the most important point. For transporting material or goods, it is freight. And what about cartage? Cartage is the expenses incurred for movement of goods covering short distance, for further transportation, for delivery to customers or storage. See, if we are transferring the goods, but the place where goods are transferred are in the short distance. Basically, either for the further suppose, lot of the times what will happen, suppose we have a factory which is inside the some village. Okay, but suppose we have to transfer our goods which are of huge quantity in a heavy fleet, means lot of the bigger fleet. So definitely that fleet will not be allowed to enter into the village. So what we have to do, some small fleets carry the goods from the factory and transfer it to the bigger fleet, so that goods could be transferred from one place to another. So it involves covering short distance. Basically, short distance is covered. Okay guys? So guys, cartage point is clear to all of you, or any doubt in any of this point? Suppose, okay, let me take one more example. Suppose, lot of the times companies will not sell their goods from the factory, directly from the factory. First of all, they transfer the goods from factory to the depot. So definitely when there is lot of distance covered between factory and depot, suppose depot is around 10 kilometers away from the factory. So what they have to do? They have to pay cartage for transferring the goods, not the freight. Freight is for the highest distance, high distance. But when we are going for the short distance, then there is a cartage. Okay guys, more simple. Now we have last three definitions. First definition is transit insurance cost. So what is transit insurance cost, guys? It is the amount of insurance to be paid to cover the risk of loss or damage to the goods in transit. Suppose we are transferring goods suppose the goods are located in Delhi. Factory is in Delhi, factory or depot is in Delhi, and we have to sell the goods from Delhi to, suppose, Kerala, around 2500 kilometers away. Okay guys, here the customer is in Kerala. So lot of distance, 2500 kilometers is the biggest distance, and it will take around 3 or 4 days. It will take around 3 or 4 days to cover the distance. Okay guys, so in 3 or 4 days anything can happen. So basically the seller of the goods are not going to take any risk for the transit, and for that purpose they go for the transit insurance. Okay guys, more simple. And the second last is equalized transportation cost. It means the average transportation cost, what I am saying, incurred during a specified period. Suppose we had put a period of from 1st April to 30th June. Okay, and in this period company had paid transportation of 20,000, 25,000, 5,000, 6,000 and 28,000. So what we are going to do? We are just adding all these 5 costs and divided by 5, and we get the average transportation cost. Is it clear guys? More simple. So it is equalized transportation cost. And what about equalized freight? Just we have to do the same thing. Equalized freight means average freight. Suppose we had paid freight of 10,000, 15,000, 7,000. We have to add all these freights and make the average. How we are going to do the average? Just divide it by the 3 and we get the equalized freight. Most simple. So that's all for the definitions. So that's all for today's session also. So guys, I'm not going to put burden on you. I want that you should understand all the things, and just from my side what you have to do, just watch the session and also prepare your notes, what you want or anything. You want to take the screenshot, you want to prepare your handwritten notes, just pause the session and just go for it. Okay guys, most simple. You can prepare your notes also, you can take the screenshot also. It's most easy, because if I'm going to give you some handouts or anything, definitely it will not clear all your doubts, but it will make you in more confusion. It will create more confusion for you. So from my side, I also told you previously, first of all, go for all the sessions, and if you want, you can take side by side, you can go for the SWOT scanner also. Just watch the sessions, just watch the concepts, and just solve the questions on all those topics. Okay, that's the best way how you get the good marks in this subject. If you are going to just give it more and more importance, definitely you are going to blow in your exams. It is the most simple subject. If you want to blow in your exams, definitely you have to just go for a scanner and all the sessions. I'm just taking care of your study material. I'm taking care of your study scanner also. But I'm not I'm not able to cover all the numericals, all the examination questions, because it is in sessions. I'm not going to include all those things. I can give you all the concepts, I can give you all the theory, but the main practice you have to do on your own. So this is the point which I want to share with you. Okay guys, so if you are just taking the session, just revise it once. If you are going to revise it, definitely it is going to be fitted in your mind, and if you take it once after completing all your syllabus, definitely it will create more and more confidence. And your group 4 is most easiest group, which I'm telling you time to time that this is the most easiest group. Okay, because 2 subjects are quite simple, cost and management audit, business valuation and SPM, you have to concentrate more on CFR and more on IDD. But again, I'm saying just don't avoid these two subjects, cost and management audit and business valuation, because these subjects are going to just make the average of your group 4. A lot of the times in professional exams, students fail due to they passed in each of the subject, but they are not able to make the average. So in group 4, if you want to make your average and even higher than 200 marks, you have to concentrate on these two subjects. It requires not much concentration, it requires less concentration, but you are not going to leave these subjects. Okay, so from my side, if you want to take more and more high number of marks, you have to concentrate on these two subjects. Okay, so that's all for today's session. If you have any doubt, I think I have to repeat some important part which I had done today. First of all, we had just take care of this point. When we just calculate the cost of production and we have to come on assessable value, we have to add 10% as per rule 8 under cost of production to come on to our assessable value. So this is the most important point which we had done today. And then we had just seen some objectives. So objectives are more simple. In this, we have to add material consumed, and material consumed includes indigenous materials, imported materials, any bought out items, any self-earned. All these things are included. Taxes are going to be removed. We have to include direct wages and salaries also, guys. We have to include direct expenses also. Then quality control cost. We have to incur extra cost for controlling our quality. We have to include packing cost also. Packing cost is definitely the most important thing. Then joint product and byproduct cost also. Then if we realize some scrap and waste, it will reduce our cost of production. We had seen one numerical, most simple. Okay, guys. So that's all for today's session, guys. So we come up with the cost accounting standard 5, the remaining one, in our next session, and we come up with the cost accounting standard 6, which is regarding direct material cost, and it will also have some numerical part. So guys, that's all for today's session. Bye bye. Have a great day ahead. Thank you so much.